Welcome to Wealth Wisdom. If you have ambitions to achieve financial success, please leave yes in the comment, and we are here to help you obtain insight and build wealth. The book we are going to share today is Reminiscences of a Stock Operator by Edwin Lefebvre. Unlock the secrets of successful stock trading and transform your investing approach. Have you ever wondered what goes through the mind of a stock operator during the tumultuous ups and downs of the market? Edwin Lefebvre's Reminiscences of a Stock Operator provides a captivating exploration of this world, presenting the highs and lows of trading through the eyes of Larry Livingston, a pseudonymous character widely believed to be based on the famous trader Jesse Livermore. The timeless classic uncovers the strategies, psychological battles, and intuitive decisions shaping a trader's journey, offering invaluable insights for both novices and seasoned market participants. In this sharing, you'll get familiar with the volatile world of stock trading. You'll also gain access to some hard-earned wisdom and personal reflections that highlight the importance of self-reliance, the perils of emotional trading, and the indispensable value of learning from both triumphs and failures. Before we continue, if you are interested in this topic, please consider subscribing and give us a thumb up. Let's continue. The early years and bucket shops. From a young age, Larry Livingston exhibited an innate curiosity and sharp intuition for the stock market, demonstrating a keen understanding of its ebbs and flows. It all began in the bustling, chaotic environment of bucket shops, establishments that accepted small bets on stock price movements. In these vibrant hubs of speculative activity, Larry honed his skills, quickly grasping the nuances of market behavior and the importance of noticing trends. Larry's approach to trading was methodical and observant, allowing him to capitalize on the patterns he detected in stock price movements. He developed a knack for predicting market trends, a skill that would become the cornerstone of his trading philosophy. But this early success was not without its pitfalls. Larry's confidence in his abilities grew, at times teetering on the brink of overconfidence, which led to rash decisions. The subsequent losses taught him valuable lessons about the dangers of hubris in the trading world. As Larry's proficiency and ambition outgrew the confines of the bucket shops, he transitioned to legitimate brokerage firms. This shift marked a significant turning point, bringing about new challenges and complexities. The stakes were higher, and the room for error was significantly reduced. Trading in this more formalized environment required a more sophisticated understanding of the market and a refined approach to strategy. Larry's early experiences in the bucket shops, while foundational, had instilled habits that needed recalibration. The strategies that served him well in the smaller, more predictable arena of the bucket shops were not directly translatable to the broader, more volatile market. It became clear that a new level of discipline and strategic foresight was necessary. At the same time, Larry carried with him the invaluable lessons learned from his early trading days, the importance of trend recognition, the dangers of overconfidence, and the relentless pursuit of market mastery. With a renewed sense of determination and a clearer understanding of the market's intricacies, Larry was primed to delve deeper into the art and science of trading. He was ready to take the reins in the world of professional brokerage, developing a trading strategy in the New York Stock Exchange. With his transition from the bucket shops to the New York Stock Exchange, NYSE, Larry Livingston soon realized that a significant evolution in his trading strategy was necessary for success. The dynamics of the market were more intricate, demanding a deeper understanding and a more nuanced approach. He began to meticulously scrutinize general market conditions. He found that he needed to focus on anticipating major market movements rather than reacting to minor fluctuations. This shift marked a transition to a more contemplative and deliberate trading style. Larry learned the value of patience, recognizing the critical nature of biding his time and holding steadfast to his convictions once a position was taken. He cultivated the ability to resist the allure of impulsive trading, understanding that true success required a disciplined adherence to thoughtful strategies. Larry's intuitive grasp of the market began to pay off, as he learned to trust his innate hunches about when to reverse positions. One of the defining moments came with the 1906 San Francisco earthquake, where he followed his instinct to short sell Union Pacific, despite warnings from friends and fellow professionals. His decision proved to be immensely profitable, netting him $250,000. This experience underscored the value of his intuition, solidifying his trust in his own judgment. However, this lesson didn't come easy. He later gave in to a friend's forceful warning, leading him to abandon his bullish position on Union Pacific that would have been even more profitable. This incident served as a stark lesson on the importance of conviction, and the perils of allowing external opinions to overshadow one's own analysis. Determined to hone his skills, Larry knew he needed to develop his own system of analysis to reduce his dependence on tips from others. This introspection and commitment to self-reliance bolstered his confidence in his own judgment, allowing him to navigate the market with greater assurance. The role of insiders and self-reliance. In the period after his brush with Union Pacific, Larry underwent a transformation from a reactive trader to one who was proactive, patient, and deeply in tune with his own instincts. With his hard-earned lessons in hand, Larry felt equipped to explore the role of market insiders and further probe the importance of self-reliance in the unforgiving realm of stock trading. In 1906, his foresight and ability to read financial conditions came to fruition when he predicted a major market break. Larry aggressively short-sold stocks, reaping a substantial profit of over $1 million as the market crashed, just as he'd anticipated. This time, he stayed true to his convictions and wasn't swayed by the empty warnings of others. As Larry's confidence in his own trading acumen grew, so did his successes. His ability to anticipate major market turns was once again validated in 1907 when he adeptly navigated the market, selling short ahead of another big financial panic. These consecutive triumphs underscored the efficacy of his evolved trading style, which now centered around a holistic analysis of overall market conditions rather than a reactive approach to individual stock movements. A pivotal moment came on the climactic day of the 1907 crash. Larry found himself in a position of immense influence, realizing he had the capacity to exacerbate the market's instability by selling aggressively. However, he chose restraint over opportunism, opting not to intensify the panic. This decision reflected a mature understanding of his role and responsibilities in the trading world, transcending the pursuit of personal gain. These experiences changed Larry for good. He was no longer reliant on tips and external advice. He'd become a confident, independent analyst, capable of navigating any situation the trading market threw at him, resisting pressure and understanding market dynamics. At this stage, Larry Livingston was deep in the complexities of market dynamics. His success had hinged on luck, skill, timing, and patience. But he knew he couldn't grow complacent. He constantly reflected on his experiences, studying market patterns and maintaining a flexible approach to adapt to the ever-changing trading landscape. It was all about moving beyond a narrow focus on individual stocks. He knew the importance of identifying the line of least resistance in price movements, taking into account both market psychology and technical factors. He shared his insights with others, warning against the pitfalls of trading against the prevailing trend and advising traders to wait for clear signals of a reversal before making their move. Larry also highlighted the need for an open mind, even for experienced traders. Acting based on opinions rather than market facts could lead to costly mistakes. Larry found himself in a dilemma when he agreed to trade under a major NYSE firm's name, concealing the identities of other clients. This arrangement aimed to attribute large stock sales to Larry's short selling, thereby protecting the interests of these concealed parties. But this led to challenges for Larry. He felt the pressure to conform to the wishes of the firm's senior partners, even when it contradicted his own market analysis. The situation climaxed with the Chesapeake and Atlantic Railroad stock. Despite his analysis indicating a potential decline, Larry yielded to the senior partner's advice not to short sell, based on alleged insider accumulation. The stock did decline, and Larry's deviation from his own trading logic, influenced by a misplaced sense of loyalty, resulted in significant financial losses. This experience highlighted the perilous nature of allowing external pressures to override one's own judgment in trading. As Larry took years to recover from the losses incurred during the NYSE firm episode, he gained a profound understanding of the importance of separating personal emotions and allegiances from the unbiased realities of the market. He realized that the market doesn't reward loyalty or past help, and that deviating from one's convictions for personal reasons can lead to missed opportunities and disastrous outcomes. These insights prepared Larry to navigate the market with a renewed sense of clarity, setting the stage for the next phase of his trading journey. The highs and lows, learning from successes and failures. Like with most things, stock trading is full of successes and failures. Larry Livingston learned to navigate both bull and bear markets, extracting lessons from each triumph and setback. His journey, fraught with highs and lows, underscored the indispensable role of intuition, the imperative of emotional mastery, and a nuanced understanding of brokerage influence. During lean times, when the market offered scant opportunities, Larry championed patience and urged traders to wait for the tide to turn. He spoke of the perils of trading on credit, noting the importance of settling debts to maintain a clear, focused mindset. He identified signs of market rejuvenation, such as increased activity and rising prices, and encouraged traders to seize these moments of potential prosperity. Time and time again, Larry's experiences reinforced the need for unwavering confidence when making trading decisions. He acknowledged the inevitability of sudden market crashes, advocating for protective measures while cautioning against overreaction. He reminded traders of the cyclical nature of markets, advising them to ride rising trends while remaining vigilant for eventual downturns. Regular profit-taking was touted as a strategy to actualize gains, coupled with patience to optimize profit margins under favorable conditions. Larry also warned against the false security of unsolicited advice. He emphasized the value of self-reliance and personal analysis, highlighting that price swings following tips often resulted in losses rather than gains. He implored traders to trust their own market assessments, steering clear of unwarranted advances and subsequent corrections. Deep dives into specific stocks and sectors became a hallmark of Larry's strategy. He placed importance on price action and trading volume, urging traders to base decisions on tangible market dynamics rather than speculative opinions. On top of that, he underscored safeguarding trading capital, and cautioned against overextending and bucking overall market trends. Finally, Larry broached the subject of market manipulation, warning against the allure of attempting to corner the market. He depicted the challenges and inevitable reversals that follow manipulated rises. Instead, he said, traders should move with the market's natural rhythm and trust their own analysis, even when external pressures and dissenting opinions loomed large. After all these highs and lows, Larry's trading career was starting to come to an end, but he still had a few last trading secrets to impart. Final lessons in market wisdom and resilience. What does it truly take to navigate the turbulent seas of the stock market? The parting lessons of Larry Livingston's trading journey offer a treasure trove of reflections and wisdom. On the topic of market manipulations, Larry acknowledged the fine line between legitimate stock sales and deception. He advocated for inclusivity, emphasizing the importance of extending opportunities beyond insider circles. He also highlighted the nuanced role of floor traders, recognizing their potential to stimulate market activity, yet warning of the perils of overusing them. Group psychology is often at play during stock trading, and Larry pointed out how even the most seasoned traders can bow to peer pressure. With that in mind, he underscored the dangers of allowing emotions to cloud judgment, and stressed the importance of promptly rectifying mistakes. Remember his early days in the bucket shops? In his final years, Larry drew parallels to contemporary brokerage practices, exposing the ways in which brokers exploit public greed. He called for increased transparency in handling stock splits and manipulation, and he demonstrated the true impacts of bear raids and insider selling on market dynamics. Ultimately, Larry always came back to two things: self-reliance and meticulous analysis. With a steadfast commitment to learning, adaptability, and, most importantly, an unwavering trust in your analytical abilities, you can forge your own path in the style of this trading trailblazer. That's the end of today's sharing. If you like our content, please give us a thumb up and share it with your friends. See you next time.